Welcome to Vegas Realty Check, your go-to podcast for all things Las Vegas real estate. Whether you're buying, selling, or investing, we bring you the latest market trends, insider tips, and expert insights to navigate the ever-changing Las Vegas realty landscape. Tune in each week as we break down the data, answer your questions, and help you make the best real estate decisions in the entertainment capital of the world.
Hey, so today we're going to cover buying out of state, buying while in a divorce, and if you can get your home equity to help with your rate buy down on a refinance. So we're going to cover all those things today on this show. I'm your host, Trish Williams. Thanks for joining us at Vegas Realty Check. And
I'm your co-host, Courtney Bohm with JFK Financial.
Yes, so we have a great show in store for you today. Before we get into everything that we are talking about and listener questions, we're going to open up with our market numbers for the week.
Sure, absolutely. So right now, single family residences on the market, we're looking at 5127, which is up 40 from last week.
All right. And then condos and townhomes, we have 1837. Those are down 12. Love to see that inventory dropping.
Right? Slowly but surely.
Yeah,
we are getting there.
Surely. Are people like, I was thinking about this morning because it's cold out. It's like freezing cold out and it's not normal for Vegas. Maybe the buyers are just scared of the cold.
I don't know about you, but when it's cold out, I don't like to leave my house at night.
And people in Vegas are like that. Like if it's raining, they'll cancel all their appointments. So like that could be a Vegas spoiled from the weather thing. So
I believe it.
Maybe. Yeah. So
what's cold here is definitely not cold many other places, but I'm telling you, pajamas at like 7:30, I'm happy.
Yeah, absolutely. New listings. So we only went up one on the new listings.
Kind of strange.
Yeah, so 936 new listings, and that was just one more from the week before.
And we have 785 price decreases this week, which is up 122 from last week.
Yeah, good to see those prices dropping, and sellers are trying to get those buyers into contract. These under contract numbers are looking good though. So 824 for the week, which is 124 more than last week. So we are seeing activity out there.
Absolutely. And I think things are starting to heat up. And as far as sold, we have 520, which is up 96 from last week. So that's good.
Yeah, those we're definitely seeing some of that January activity. I still think it's slow. It's not moving as quickly as I would hope it would, but it's doing okay.
Yeah, I think we're slowly going to see an uptick come February, March. I think a lot's been very steady.
Yeah. Fed met yesterday. How'd that go?
It went not like I would love it to go. I would love to see, rates go into the fives, but and I think I talked about this about 2 weeks ago on this show, we predicted that this meeting was going to virtually keep everything exactly the same as far as the rates went, and that's exactly what happened. The March 18th, 19th Fed meeting is supposed to, prediction-wise, have the rates come down a little bit. So we kind of knew based on just different things that we were hearing that this one was going to be virtually nothing. Nothing was really going to move, and that's pretty much exactly what happened. So right now we are sitting virtually where we were almost last week, right at around a 7% for a conventional loan on a 30-year. And you're looking a little bit lower, about a 6.5%, a tad bit lower on a national average for FHA and VA 30-year.
Yeah. So those have not moved much.
It's sad.
But the Fed is not the end all be all of the rates and where they go. So other things can happen. I know yesterday we were both in this housing forecast, and they were talking about how the job reports are really the most impactful as far as where those mortgage rates are going, which I guess that was surprising to me. I didn't really realize that.
I think there's a correlation between so many things versus the bond market, jobs, spending, credit card rates, everything's kind of in conjunction with. And I think that, we're going to see what happens in the next few months, but March 18th, 19th is really a date for us, especially as lenders, to kind of look out for and start seeing that slow trending down.
Yeah.
We're hoping to come down a little bit into the, probably high sixes around that time. But we shall see. I think we've all tried to make rate predictions, and we just don't know. We thought last year we were going to be a lot lower than what we ended up ending the year with. So
yeah, and when it comes down to it, I mean, so many buyers are saying they're putting off their buying decisions, their buying activity until the rates come down. Yet there's so many buyers that still home buying can be affordable for them. They still can afford the payment. They would just like it to be a lower payment. But keep in mind, when those rates do go down, the prices are probably going to increase because we still have a very strong market, even with the environment that we're in right now with rates.
And I think the most important thing, which obviously we're in the industry where we deal with this all the time, but that's where you hear that annoying saying that we always use or hear. Date the rate, right? Or marry the house, date the rate.
Yeah.
Because at the end of the day, you have to think if you're just waiting for the rates to come down, so is everybody else.
Oh, gosh.
And the problem with that is when the rates come down, now you have large investment companies that are going to come with cash and they're going to buy up a lot of property.
Oh, yeah, because they're going to buy it with the intent of they know the values are going to increase. So it's going to be, we'll see more people getting into flipping, buying, holding for a couple months because they know that once those rates come down, the buyer pool will be flooded.
And then you have, people who are coming in with 3.5%, 5% down, getting beat out of a market because people are coming in with 50% down or all cash. And so I'm sure in those type of markets, do you see as many seller concessions or things being offered?
No, and buyers have to pay over the appraisals a lot in those types of markets.
Absolutely.
So definitely not a buyer-friendly market. So that is, if you're waiting for those low rates, that you're waiting to be shopping in that type of market, which might not be the best scenario for you.
Absolutely. And keep in mind, and why we say that is because as long as you can get into a home and qualify, down the road, we can always refinance you and make the payment even more comfortable while you're building equity versus paying someone else's equity. And these homes are not going down.
No.
Our town is only growing, and we're going to get everyone from California, and it's been growing and the value's been going up tremendously in the last 2-3 years.
Yeah, even in spite of all the rates and all the things and the buying market not being so attractive, we still have appreciation, which is definitely something that you need to pay attention to because that is proof that as soon as those rates come down, the prices are going to increase even more.
Absolutely.
So that is our crystal ball prediction for you.
Yes, rates go down to the low sixes, high fives. That's my wish.
Yes. So we have some news. New York Times reported that NAR and several Michigan real estate associations have filed a motion to overturn another class action lawsuit, which is focuses on the MLS requirement to join NAR. So I know most consumers out there have no idea what this means and might not even matter to you, but this is part of this like big settlement lawsuit and all the disputes that we've been having recently in regards to this, because currently agents that are part of the MLS, which is the multiple listing service, which is like a local association, have to join the National Association of Realtors, so have to be part of the NAR. And, some agents have been, just kind of looking at that, like, why is that necessary? What is the purpose of that? So NAR does offer a lot of benefits and does have a lot of things associated with being a member, but it is something that some people are trying to dispute, and NAR and some other associations are pushing to overturn that lawsuit.
So it is a requirement to be part of NAR.
It is a requirement to be in, if you're like our MLS, if you want to be in the local MLS, you have to be in NAR. Gotcha. So it is a requirement currently. But there's a lot of changes coming out. There's lots of class action lawsuits. Another one was filed yesterday against some other brokerages. I mean, this is getting out of control, absolutely out of control.
I don't think you're going to see this trend not continue. I think there's going to be a lot of lawsuits, and I think there's so many gray areas with what was going on that you're just going to see it continue, and you're going to hear news about it probably a lot.
Yeah, it upsets me so much because I look at the bullet points of like the initial lawsuit and the reasons and the things that they're, claiming are done that made this whole thing happen. And I know I wasn't doing that.
Yeah.
And because I, maybe was trained well or, things happened. I don't know. I knew that was against the rules. I wasn't doing that. So for me to be part of this now and have the repercussions of it really upsets me. Really upsets me. And it's not, I know I'm not the only one that wasn't doing that. There's thousands and thousands of realtors, and it's like the few bad apples we're all paying the price for. And that is just so frustrating to me. But that's the way the system is, and there's no way around it.
And I think people are starting to fight, why do I have to pay to be involved in this if I don't want to be? Or I think there's just a lot of uproar, and people are changing the future of, I think, how real estate is operating and things that are involved, and where's my money going?
Well, one of the plaintiffs that filed the initial lawsuit has now opened up this all-inclusive by, we can sell your home on our platform for like a very low price, kind of business. I feel like there's a huge conflict of interest in that. Like he started this whole thing to overturn the agency or overturn the way that, that everything in our business was done, the way everything was practiced. And now he's using it as a personal benefit. I don't know. I mean, I'm not an attorney, so I don't know how that stuff works, but that seems fishy to me.
And I said that's where when you hear about all these little regulations or things that change, there's going to be like a literal like slippery slopes of like people trying to get around things or gray areas that aren't defined. And that's why I think there's going to be a lot more weird, issues or lawsuits coming up, but we shall see. It's just continued since that. So
yeah. Another news report we had, Tunnels to Towers. I think that's the name of it. Tunnels to Towers Foundation, which this is a foundation that my husband and I contribute to. It's a very good cause. They help build homes for veterans.
That's amazing.
So they are a nonprofit organization dedicated to assisting fallen first responders. Are now they're trying to build a project, or they were trying to build a project here in North Las Vegas. And I guess through zoning requirements and everything like that, it got shot down to the request to rezone the area. So that is very unfortunate. It's one of those things that, we would have loved to see something good like that brought to the Valley, but I don't think they're giving up there. So that will probably just be, they'll probably just look to another area, maybe not in North Las Vegas jurisdiction.
And I think that kind of ties into last week when I was talking about on the news how they said Nevada has the worst housing crisis in the country.
Yeah.
Especially affordable housing, that we're 80,000 homes short here in the Valley, especially for affordable homes. And, there's a huge waiting list for people to get into those homes, including veterans. So it's just it's sad. We're growing so fast, and I think there's a dire need for affordable housing here. And you see it when you're driving around. You can feel it.
Yeah, absolutely. And KLAS, which is one of our local Las Vegas news stations here, they are offering a lead hazard assessment and remediation in older homes that have small children that are within the city limits. So bullet points, has to be built before 1978, which that was the risk of lead-based paint. You have to have a household, has to have a child under 6 years of age who resides or frequently visits the property, and household has to meet the HUD guidelines. If you are interested in this or you want to look into more information, you can call 702-229-7444 or email SHIFT, that's SHIFT, at lasvegasnevada.gov. So that's a great thing that can help people that are, at risk or still have lead-based paint hazards in their home. And definitely that is a concern for small children.
And it is a big deal. I was actually reading some stats on it, and it said about an average of 170,000 homes here in the Valley they do think have lead-based paint issues, obviously older homes.
Yeah.
And then typically in serious cases, it can cause seizures and death. And in mild cases, especially children, it can cause headaches, a lot of brain fog. And I think it said like nausea, stomach aches. So it is something serious. And if you have an older home, it's a free assessment. Get it checked out, because it might not be so visible now, but it definitely will be really visible later. And it's a really big deal.
Yeah, it's one of those like underlying things that you don't really know is making you sick. So definitely, you have an older home, check it out. And remediation of that, it can be very costly. So it's great that there's a service available to be able to help people with that.
Absolutely.
Yeah,
I think that's great.
Check that out if you're out there. And let's get into our listener questions, starting with Mauricio.
Absolutely. And then I'll go into, I have a good loan program too.
Oh, let's talk about your loan program first.
Okay.
Yes.
So I've covered different types of loans, and one of them I covered, I think maybe 3 or 4 weeks ago, was an I-10 loan, which is someone without a social security number. So this loan is a foreign national loan. So if you have friends, family in other countries, of course it can't be a primary, but they can actually purchase a home here.
Okay.
For an investment or a second property.
All right.
So they don't have to actually live in the United States to be able to purchase a home here.
Okay. So what are the requirements on that?
Absolutely. So we can do a 1 to 4 unit property, and it must be non-owner occupied. Obviously, if they're coming from another country, we would be looking at their income in a different currency typically, right? Not always, but usually they're overseas and their currency is different. Some people are working remote from another country, so we can use their income to qualify the loan. The biggest thing is they must have a U.S. bank account.
Okay.
So when they're doing all the closing, wiring the funds, they can't not have a U.S. bank account. Okay. So that's something that they would have to open. They're going to look at proof of residency, and we're going to look at their living situation and verify that that's all good as far as their current home. And then the loans typically are going to be 30% down or more. You're not going to see a foreign national loan under 30%. So it is a decent amount down. But the great news is that they can get a loan, and we're usually going to look to make sure they have an average of 6 to 12 months reserves.
Okay. Yeah, definitely, because you want to make sure that that they're covered. They're covered here, especially not being in the States or being able to track that.
Absolutely. So not a hard loan to get done, but there are going to be some stipulations. And the biggest thing is the 30% down. Must have a U.S. bank account. It's vital. We can't do it without that. We can't wire them. They can't wire the money to us. Title, all the closing costs and things like that.
Yeah, you mean you can't do the, what is that, WhatsApp, where they say I'm wiring funds from.
I'm like, please do.
Just give me your account number so I can send it over. No, it goes through escrow.
Sadly, I've heard stories of that working, which is
I have
crazy.
I have too. It's unbelievable.
Yeah.
Yeah, so, all right, well, that's a great thing, great product. If you have friends or family that are not in this country that are interested in purchasing here, then let them know we have options.
Absolutely.
Yeah. All right. So going into Mauricio. Mauricio's buying a home, but he is not buying one out of the country. He's buying one out of Las Vegas. And he wants to know that if he is out of state and he doesn't think that he's going to be able to be here for the final closing or signing, what can he do? Can he sign electronically?
Absolutely. So that happens all the time. Mm-hmm. So you don't have to physically be here to get your loan closed on time. So we always ask that you let us know. There has been situations where people left last minute and didn't tell us. And it's not fun to try to find, we have to find a title company, but based on what state you're in, each state has like a different regulation of closing. Some can be done by a notary, so we can actually send a notary to wherever you are.
Yeah.
And the great thing about a notary is usually they work into the night as well. So if you get off work or you're on vacation or whatever needs to be done, or we can also set it up at a title company for you to go into the title company wherever you are. If you're in California or out of state, somewhere else, not a big deal at all. Typically, there's going to be a little bit of an extra fee for that versus you just coming to your local title company and signing.
Right, but it's a minimal fee, like usually $150,
$200.
It's not definitely worth the convenience. And I mean, I've had people sign at Starbucks before. Like they can literally meet you anywhere at any time that you need.
Super simple.
Mobile notaries, that even works when you're in the state and you just have a crazy work schedule or something's going on and you can't go to the title company during business hours. You have options there. So that works out for you, Mauricio.
And you can actually, I've had a loan close and they were in another country. Yeah. So we sent everything to the United States Embassy and they actually had to go there and sign.
Yeah, we've had to do that before too. So yeah, that is an option too. So it works. It works anywhere. We can work it out no matter where you're at. You do not have to physically be here.
The biggest thing is just tell your lender, tell your agent that you're all of a sudden leaving town. That way, we're getting the home closed on time and it's not a frantic, where are you and what do we have to figure out last minute?
Yeah, definitely. Let us know ahead of time what we need to be preparing for.
Absolutely.
Yeah.
And then the next one is let's see.
Amy.
Yes, Amy. Yep. I'm getting a divorce, but it's not finalized yet. But I want to purchase a home right away. Is that possible while I'm in the middle of a divorce situation?
You have to be very careful with this, Amy. The reason why you have to be very careful with this is I have seen so many times where the let's just say it's your ex-husband, just for a conversation purposes or soon to be ex-husband, and he says, yeah, go ahead, I'll sign the paperwork, whatever's needed when it comes time. And in the meantime, during this 30-day escrow, you and him are having a dispute. Maybe it's with child support. Maybe it's with child custody. Maybe it's alimony. Maybe it's something. You're not seeing eye to eye. That happens during a divorce. And they say, their attorneys will say, well, they need this quitclaim deed signed. So now this is going to be an item that we use to negotiate, to back them into a corner, to make it to where you have to do what we want you to do. So be very, very careful about that. I tell people that if you are getting a divorce or you're in the midst of a divorce, the spouse has to sign what's called a quitclaim deed, releasing their interest in the property that you're purchasing.
Absolutely.
I require or highly recommend that is done during the 10-day due diligence period when we open escrow, because that is your cancellation period as well, where you have the right to cancel. And if we don't, they can do that ahead of time. They don't have to wait until closing. If we get that document executed, notarized, and signed on file before closing, then we have no last minute surprises at the end of the transaction. And you're within that due diligence where if the other party is not cooperating, you have time to cancel and get back your deposit.
Absolutely. And I think on a lender standpoint, can you get a loan when you're going through a divorce? The simple answer is yes. However, there are a lot of things that we need to see before we can close a loan. Is it the best time to necessarily get a loan? It's always the best time once everything's finalized. And the reason being is that as a lender, we have to look at how much, we're qualifying a loan based on what their debts are, their finances. So on an FHA loan, if we're doing an FHA loan, if you're not legally divorced yet, typically their debts are going to hit you as well.
Yeah.
So even if you don't have a credit card commingled, if they owe $50,000 on a Visa credit card and you're not legally divorced on an FHA loan, we have to hit for it as well. So with FHA, VA, it's the same, especially in a community property state. Now, when we get into conventional loans, we don't have to count the debts. However, no lender is going to close a loan until they see all the finalized divorce decree. For the reason being is we don't know if the husband's going to owe $5,000 a month in alimony or $1,000 a month in child support. So we need to see those final numbers to be able to feel confident that he has the ability to repay. He may not qualify after, being told he has to pay $1,000 a month for child support or, $5,000 a month for alimony, whatever that looks like. So typically we'll wait, and then the second we get that, then we can move forward and close. But there's a lot of moving parts that go into that. Divorces are messy. Not everything goes as smooth. So can you get a divorce? Can you get a loan when you're getting a divorce? The simple answer is yes. It's just there's a lot of things that have to be finalized before we can just issue
the loan.
Absolutely.
Yeah, definitely. So I would talk to your lender, talk to your realtor before you move forward with that decision. Don't surprise us last minute at closing and say, oh yeah, I have a husband and we're getting divorced, because I've seen that happen last minute where it can throw a big curveball into everything. So
absolutely.
No secrets, no surprises. Make sure we know everything up front.
And also too, once we have, a divorce decree, when we're looking at that, we can use for possibly whoever's getting the child support, the alimony, as long as it's going to continue for 3 years or more, we can actually use that as income as well.
To help you qualify.
Correct.
Yeah.
So things have to be somewhat finalized before we can just move forward. So it is stressful. Obviously, we're there to help, but there are things that have to be in place before we can just issue you a loan. Absolutely.
Okay. All right. And then we have Rick, our Rick here asked us a question last week that I thought was a very good one. And so can you use the equity in your home if you're doing a refinance?
Yep.
And you have a substantial amount of equity in your home, are you able to use that equity to a rate buy down? So on the refinance?
Yep. So the answer is yes. So anytime you're doing a refinance, a cash out refinance, we can typically go up to 80% of the loan to value, meaning whatever the house's value is, 80%. So if you have 40, 50, however much money you have left of that right before you hit the 80%, let's say you have $100,000, you want to do a cash out refinance. We can use that money, that equity at closing, to buy down the rate for the closing costs and everything. Now, with that being said, based on what you're doing right now, ideally, if you're one of those amazing, fortunate people that have a 3%, a 4% mortgage, even a 2.5%, typically you're not, unless you're in dire need, you're probably not going to want to do a cash out refinance and buy down a rate right now, for the simple fact that, you might be using the money to pay off debts and things, but because the rates are so high right now, most people are going to end up refinancing anyways in the next 12, 24 months. And so, yes, you can buy it down. I think when the market was during COVID at 3.5%, 4%, obviously spend the extra money and buy down the rate. Never going to see rates like that again. But right now, it's just not really worth using your equity to buy down a rate in this current market. Can you do it though? Yes.
Because the cost, what it's going to cost you is going to wipe out the benefit, right?
Most of the time at these rates, yes. Now, in the market, when we were at 3-4%, people were pulling out $100,000, paying off all their credit card debts that maybe saved them $1,500 a month in cash flow, but their mortgage went up $250 a month.
Right.
So for them, it was really worth it. Right now, because the rates are so high, you might be at a break even. It really depends on each individual situation, how much credit card debt you have or what you're trying to do. But usually if you have a pretty low mortgage right now, as far as the rate on a first, I don't recommend doing that unless you absolutely have to. And right now is not the best time to buy down a rate.
Yeah. And the important note about rate buy downs is I think that often people think that if you buy down a rate, they think, oh, I can, pay $5,000 or $10,000 and get my rate from 7% to 5%. It doesn't work that way. So it's when you're buying down a rate, first off, they're very costly, and it's a cost that isn't, it's not like there's a certain number gets you a certain point. It's daily, it's their price.
The rates change, the cost changes based on debt to income, credit. There's so many factors that go into how much it's going to cost when you buy down a rate.
Yeah. And typically those rate buy downs are just
they're very
little
costly.
Percentages of points.
And really you have to look at if it's going to cost you $5,000 to buy down a rate, but it's saving you $100 a month. What is your break even amount of time? And are you even going to be in the home once you hit your break even? Are you going to sell the home in 3-4 years?
Yeah.
And so right now it's just not the best market for that. Are there markets where you want to buy down a rate? During COVID, all day long.
Yeah.
You're never going to see those rates again. I don't think so. But this market is just not for that.
Well, I have, when I bought my home in 2018, I paid at that time, rates were in the 5s. It was great. But they were in the 5s, and I paid $5,000 for a 1/4 point buy down. So it was like 0.25% buy down from the rate that I was at. So I think it got me to like an even 5. So $5,000, I was very happy with that. However, you have to look at this time. How long Like, what's the savings of that over the stretch of time? I was thinking with the intent that on a 30-year loan or 20 years or however long it took me to pay off the loan, that would break even and make sense.
Absolutely.
But what happened, COVID hit, and rates got down to nothing. And I refinanced in March of 2020 when rates were 2%. I didn't, I had that loan then for, less than 2 years. And that $5,000 I paid was kind of basically flushed down the toilet because I may have, seen a return of that of $100 a month for, less than $2,000. I'm sure. So,
granted, did we ever think we were going to see rates that low? No.
I could have never called that. Could have never expected it. It was, so it is. You have to keep in mind of that, the return of that buy down. If I look back again, I wouldn't have bought down the rate. I would have just wrote it out for until refinancing. But
Absolutely.
I never would have seen that coming. Yeah. So I didn't know what was going to happen. And in the end, I won. So it's fine.
But this market rates are coming down. So don't buy down. It's just not cash out refinances, things like that. Right now, you have to really look at each individual situation. It's just right now you're going to refinance, especially if you're in the 7s.
Yeah, and the cost to buy down for the little minimal
very
of a
costly.
Percentage that it is really very costly.
It is.
And unless that rate is somewhere where you say, I'm good with this rate for 30 years, then maybe it makes sense. But if not, then you have to really look at that return and how long you're intending on staying in that rate.
Absolutely. And at 5%, yours is a very rare case, which I'm sure other people have the same situation where it was absolutely worth it. But did you hit your break even? No,
definitely didn't hit the break even because it was, like I said, not too long after that rates came down. So
fun stuff. Yeah. But either way, you have a great rate.
I have a great rate. It saved me hundreds of dollars every month. I was so happy for that. That's and that's.
Those were the days.
Would never touch a refinance. And that's even when it comes to, because I have, a few properties, we have a few properties. And when it comes to looking at paying down, because I always advise paying down your mortgage, doing those extra payments, trying to get the note paid off quicker is a great strategy. Everybody should be doing it. It's very easy to do. Even the littlest payment towards your principal can make a big difference overall.
Absolutely.
But for me, we have some other properties that have like much higher rates. So those are priority. Like my primary, I'm like, that rate's costing us nothing. So it's fine.
Those were the days. Telling you.
Yeah. So it's the other ones with the high rates that we're trying to get down first. So those are good. And we can talk about that on future shows too, of strategies of working towards your finances and getting everything in order. So if you guys are watching the show, please check out our link tree, which is www.realtycheck.vegas. Right there, you can see everything Realty Check, all of our social medias, all of our links to everything about the show and everything about both of us. I did do over the last week. I did a comedy show at the Improv.
You did so good. I was so proud of you.
So if you want to see me do stand up, you can check out the connect with me on Facebook through that link, and I have a video there on Facebook if you guys want to see it.
I love it. It was so good.
It was my first time ever, so it was all right. It was okay.
I laughed.
Yeah.
And I would have been brutally honest if I was like, I thought you were really funny.
No, thank you.
Yeah,
thank you.
I thought it was good.
I have some hilarious.
Plus, it's like Vegas humor, so I always think that's funny.
Yeah. No, it was fun. It was definitely an experience, but a lot of fun. So you can check that out if you want to. And if you need to reach me, my phone number is 702-308-2878. How do people reach you, Courtney?
So you can reach me at 702-416-6918. Call or text me. I'm always available.
All right. Courtney is your money girl. I will help you find the home or sell the home. So yes. All right. Thanks, guys. And we'll see you next week.
And thank you, Chicago Title.
Oh, thank you, Chicago Title, for being our marketing partner.
We appreciate you.
Thank you.